Hi there, welcome to Grain TV. It's Wednesday, March 30th, one day to USDA's crop report, but the grain market took a dive already. Let's take a look at the grain hedge trading platform and see where we closed. In Chicago, corn gave up 6 cents a bushel, having its biggest loss since January 1st. Beans were off 7, and wheat losing big, 12 3/4 on Chicago, off 15 in Kansas City. News today was really just sort of light, although we did have some new weather forecasts that show a better chance of rain potential in the plains in second week to third week of April. These are long range forecasts, but nonetheless, the rally that we'd had carrying us higher, especially in Kansas City wheat, really took it on the shorts today, really coming out of the gates with just a big sell-off and sort of treading water. So tomorrow is the USDA report. You know, that's going to be something to really pay attention to, especially in regards to planted acres. USDA has surveyed farmers based on March 1. Now that's important because since March 1, we've seen a lot of variation in grain prices, soybeans in particular gaining a lot of ground relative to corn, but this will be our first indication of what farmers intend to do. Most people are looking for a big jump in corn acres from last year, gaining 2 million acres, some as high as expectations of 3 million acres higher than last year. You know, farmers are really sort of looking for that potential yield in the case of good weather that can give them that boost. So corn gives them that swing higher if they really get ideal weather, where soybeans not so much potential upside on yield. So that's what we're hearing from the fields and from our friends at various crop insurance companies and crop adjusters, that farmers are really favoring corn this year, and the expectations are calling for, again, a 2 million acre increase. On the other side of the spectrum, wheat is supposedly going to be the loser in terms of acres, losing about 3 million acres. We know winter wheat plantings were off substantially as of January survey, so it'll be interesting to see what USDA says for spring wheat. The other news that'll come out tomorrow is quarterly stocks. This one will be something to watch for, especially in the case of corn, where we get an indication of feed use. We still expect a big number, around 7.8 billion bushels of corn on hand as of March 1. That compares to 7.75. I wouldn't be surprised to see that number actually a little bit higher, but again, it'll be interesting to see. That can really change, especially the front month May contract. Right now, we've been sort of treading water. Basis has definitely been treading water over the growing season, or over the post-harvest season, and so I think farmers have been holding tight, hoping for a rally, and I suspect we will see pretty high stocks in that quarterly report. Let's take a look at the May corn contract here. We've had a really down day, as I mentioned, the worst day since the first trading day of January, off 6 cents today. You know, and what's intriguing about this is still very much a bear market, and you can tell a bear market because that's where the momentum is. When it's a bear market, you see very sharp down days, and you see up days that are very slow or guarded, if you will. And so we've had a run down from those highs back in February, late February, down to the lows in early May. That only took us 6 days to retrace. So we had a 6-day period of down prices. Meanwhile, that same price movement took us 21 days to gain back over the last 3 weeks. And so, you know, that's still an indication that this market is not really very bullish. It's still very bearish. And today was just another reminder of that a 6 cent down day really erased almost a week's worth of trade higher. So watch those USDA reports tomorrow. They're going to be pivotal for future price direction. I think the trade mostly is leaning negative, leaning bearish on those reports. So it'll be interesting to see if USDA can give us any sort of surprises to turn this market higher. But for the time being, it certainly looks like the downside is where the action will be. Tomorrow at 11 o'clock Central Time, those USDA reports come out. Follow us on Twitter at graintv.com, or as always, visit us online at grainhedge.com to learn how we can help you in your grain marketing situation. GrainHedge is pleased to announce a new tool called Technical Alerts. Technical Alerts is free to our trading clients and delivered by email first thing in the morning every trading day. Technical Alerts is a powerful, easy-to-use system that provides quality trading opportunities. Each trading opportunity shows a chart and analysis, providing clear price targets and risk potential to allow you to make an educated trading decision. The commodities covered include grains, livestock, crude oil, currencies, bonds, and metals. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. Let's take a look at how to interpret a technical alert. At the top, you will see a red or green indicator arrow which signifies the market's likely move. Red shows when weaker prices are expected, and green for when higher prices are expected. The summary section shows the expected price target and the expected duration it should take to reach the target. Also, Technical Alerts provides both support and resistance to help you identify key levels on the price chart. Underlying support is where technicians believe there is a level of buying interest, while overhead resistance is the price level thought to trigger more active selling. The support is marked with the letter A on the corresponding price chart, and resistance is marked with the letter B. Below the chart, you will see the data interval of the bars. For example, a 1-hour data interval means the chart pattern was constructed from a 1-hour bar chart. And when you are using the grain hedge trading platform, you can use the pull down on your chart to change the bar interval to the appropriate time period. As always, we strive to provide you the best tools to improve your trading and hedging activity. If you have any questions on how to use Technical Alerts, please contact us at 877-472-4607 or by email at support@grainhedge.com.